need to be on footprint charts. It's really not much more than just an X-ray vision of a candle where, throughout the day, one day, one candle or 30-minute segments of that day, just like we use everything, 30 minutes, volume profile, market profile. We segregate it to see, how does the market represent itself and what is the structuring in terms of value? Are we in balance? Are we in imbalance? And then the footprints come in to help us kind of spot, right? I would say different setups, right? Whether it's absorption, divergences, we use stacked imbalances. HVN or cluster volume is fairly similar to volume profiles. So there's a lot of overlap, right? Between footprints and volume profile. One makes the other, meaning when footprints are having an absorption, that means you're going to have a lot of volume on a volume profile chart, whether absorption is at the top or at the bottom, sometimes in the middle if you have an expanded profile. So that's simple. And then approaching support and resistance. Anytime you have a big level that you're watching, whether it's monthly, weekly, or even yearly value area highs and lows, you're really paying attention to see how's that looking, right? Retesting major levels from the top or from the bottom makes a big difference, right? When you can see when the orders are coming in, is the price going lower as we're at the lows, a massive delta is flipping red, and then all of a sudden, you get basically institutional traders closing their shorts and you pump. So that's why we use support and resistance using value area highs, lows of bigger levels. And then, noticing candle POCs and figuring out, right, when you guys see those stacked imbalances on the bottom, which are stop runs, right? What does that mean, right? Especially if it's not within the body of a candle or if it's outside, if it's within the body of a candle, what does that mean? Those things will help you guys kind of identify and increase the probability of the trades that you're entering to be successful. And the concept of how I use them, it doesn't necessarily mean is the only way to use them. Some people might have, made up a conclusion on how it behaves differently, but at the end of the day, right, you're still going to be looking at orders and the interpretation of those orders and what it means in terms of the context to the chart. You cannot look at a single candle on the footprints or a single 10-minute, footprint chart and say, yeah, that's a buy or seller. You're probably going to be, burnt many times before you realize that footprints and then the other strategies are really dependent. Excuse me, in terms of context, where are we? So that's important to keep in mind throughout the class, right? Is it really matters the context of where you are and the relationship to the footprints that you guys are seeing. So with that being said, I'm going to go here. When you guys talk about the bid and the ask, there's two types of participants on the ask, and there's two type of participants on the bid side. So let me just figure out. Let me get this. So when you guys look at the bid, right here, right? So that's what you guys will see on the footprint charts. You're going to see a nice candle, and it has a bunch of numbers like here, here, here. Some numbers will be highlighted, and that's what I'm going to cover once we go into the charts. But what we're looking for is on the ask, on the up top, you will have passive sellers. So these guys are usually going to be sitting somewhere at the resistance levels, right? And you're paying attention to see if they're getting filled, right? A lot of times, you guys hear me, there's some trapped, maybe buyers, when it looks like, there's, numbers here like 24, 23, 22, and a bunch of zeros at the top. I typically tell you guys, man, something's off. It seems like that this is really bearish, right? Those orders got filled on selling, but the price never made higher highs, right? Usually this indicates there's going to be a little bit of a reversal coming, right? And this would typically happens on the tail of the candle, not necessarily the body of the candle. These moves are typical in the morning, right? And usually when the volatility comes in, you guys will see a lot of stop losses, right? Where they're just coming in and trying to get the absorption, right? They like to do this in the mornings. So on Mondays, typically when you have an overnight session low, let's say, Sunday we open at 6 p.m. here, and this is the low, and we are in a trend like we are now. And this is the low of the day. So what typically they like to do is they like to drop it all the way, auction higher all day, inventory is not long. Then they come back, and that's where, I can utilize footprints to see what actually happens. If they come here, right, and they show a bunch of zeros here, and then there's bid numbers on this side, and we quickly auction higher, then I'm looking for opportunities to go long. And then when we went below the value of these candles, we got aggressive bid buyers, which should be the passive buyers showing up on the left side. So they got filled, and now we're looking to auction back higher, right? So passive sellers show up on the right, on the ask side, passive buyers show up on the left, usually at support level. Aggressive buyers and aggressive sellers are also on both sides, right? So on the ask, you have the aggressive buyers. So it's almost like me, I'm selling bubble gum for 25 cents, and you guys are like, okay, I'll give you 25 cents. That's you buying the market price. Whatever is the ask, you're offering that. Those are the aggressive buyers, and they take the liquidity from the ask. Does that make sense? Cool.
Yep.
Okay.
Yes.
Then you have
Yeah.
aggressive sellers, right? So these are the people that, let's say I'm offering that bubble gum for 25, but I'm willing to take 23. That means I'm willing to drop the price and try to get rid of my bubble gum at cheaper price. So instead of getting the 25, okay, then I show up on a 23 level here at the price level, and I'm like, okay, I'll take it. And you guys have probably have sold stuff, whether it's garage sale or whatever you do. But if somebody's like, hey, you have this item, you want $2,000 for it. What if I give you 1,800? Well, if you accept that, you become somewhat of an aggressive seller. If you don't want, a penny less, then you would just set at 2,000 until that order or somebody finds value for the item that you're selling, and they're like, okay, here's 2,000. You would be a passive seller. If you accept it for 1,800 here, you're indicating a little bit, urgency to get rid of it, right? And same is true for buying, just the opposite, right? If I want to buy this item at 2,000, I want to buy it at 1,000. What do I have to get? Well, I gotta get somebody willing to sell that item, right, at $1,000. And as long as I don't move that price offer that I'm giving you, that makes me a passive buyer. If somebody comes in and offers a 1,200, and I, as a buyer, move up from 1,000 to 1,200, that would make me more of an aggressive buyer, right? I'm trying to get that item, bubblegum or whatever the hell you're buying, trying to get it right now, and that's kind of how I would distinguish these pieces here in terms of passive sellers on the right, and then you have aggressive buyers on the ask. So both of these are on the ask, and then on the bid side, you will have aggressive seller and passive buyers. So that's why sometimes you can't look at the footprints on your own and be by itself and be like, oh my God, that's a buyer or that's a seller. Well, you have a 50-50% chance to be right in terms of, what direction is that. And as you guys seen lately, it's just been, aggressive buyers coming in. There are passive sellers that we've seen, but not necessarily as aggressive or as many on the ask side as we got aggressive buyers trying to bid higher. Okay. Any questions on this?
What you just explained makes perfect sense, but my question is, I'm used to seeing like on the bid is buyers, and so you have passive buyers and aggressive sellers on the bid, and passive sellers and aggressive buyers on the ask, and that's confusing for some reason.
Yeah. So, and it's intended to be as that, right? Because if it was simple, if we only had aggressive buyers on the right side and you had aggressive sellers on the left side, I mean, it would be a cake in the, it would be a walk in the park to make money in a stock market. This makes it very difficult, was it a stop sell order that triggered, or was it a buy limit order, right? That triggered on this side? Or was it an aggressive sell order on the bid side that pushed the price down? So all of these are in relation to the price behavior. Does that make sense? So are you still confused where the passive sellers are or where the, passive buyers are? Are you not following or?
No, I understand the passive stuff. They're just limit orders, right? But it's the aggressive sellers I guess they're just selling when somebody market buys them, right? Is that an aggressive seller?
That is correct. So if I'm looking basically, if I hit a market sell here, right, I'm gonna be trying to get rid of the inventory as quickly as possible. And most of you guys have done it if you're trading even options or, futures or any shares, right? Most people, when they buy shares and they want to get out of it on the retail side, they just want to get filled now. So when you want to get filled now, you're gonna hit market sell, right? I want to get out of this position, out of the shares right now, and you get filled. If I'm selling aggressively here, then most likely I'm gonna be hitting potentially some passive buyers that are absorbing that. If there's a lot more pressure on aggressive selling, which kind of leads to this point right here, in order for this price to go from $100 to $99, what has to happen?
More sellers than buyers.
All
Well,
those 50 need to be taken up.
all these 50 guys that are bidding at 99 have to be taken out by the aggressive sellers. So people that are selling on, let's say, at the bid, right? They have to absorb these 50. Then they would go to the next level, which would be 98, and they'd be like, okay, well, you have 66 of them. And if you look at the book right here, there's a lot of orders on the ask right here, for instance. A lot of orders at 107, 106. So if we wanted to move up in the price, in this case, what do you have to do? If we want to go to 104, well, if you want to go to 104, you're going to have to absorb or buy up all of these orders that are right here. Meaning this guy is going to have to say, yeah, give me 75 at 100, then give me a 101, give me 90 of these, and so on until you get to 104. So these would be market buyers against the limit sellers. Okay. And then the opposite is true here. This would be aggressive sellers hitting the limit buyers. Is there a chance that these limit sellers meet the aggressive buyers? Yeah, why not? I mean, if I'm selling something at 100 aggressively from 101, right? If it's bidding here and I'm hitting a market sell and this guy's hitting a market buy, is there a chance that they match? Yeah, of course. But typically, aggressive seller will meet with a passive buyer. And that's typically how you get absorptions as well on the buy side. And absorptions on the on the top would be market buyers. They're like, I want to buy. But if I have a lot of inventory here at the top, I keep hitting market buy, but the price is not going higher. As soon as I hit it, there's more. That would mean like this guy here, look at the orders on the left side. They're kind of imbalanced to these guys. They come to 106 and they keep hitting market buy, but they can't move because of what? There's probably an iceberg, a large order sitting there, and they're not eating all of them orders at that price level in order to go up a step. Does that make sense? So a lot of limit sell orders sitting here usually leads you to believe there's a large iceberg order. An institutional trader has taken the box. If you think about if he has million shares, he's like, okay, well, we're gonna do 250 here, 250 at another level. So if you can eat up these 250,000 orders here, then I'll hit you up with the next one at 120. So as you get here, okay, this is going to be a quick price action. That's when you see those breakouts, right? And people just hit market buy because there's no offer. So we fly to it till the seller is like, okay, well, you absorb my orders at 107. I'm going to wait at 120. And then you get this price action. And what does retail do when they see this?
FOMO
This,
in.
yeah, they FOMO
You
in.
hit
And when
market buy.
they FOMO in and then they meet another guy with the same person with another order. He sold this one. Now he has another 250, another 250. Now he's working on second box. This box, he starts selling, but let's say this guy notices that there's not enough market buyers or pressure to buy. What do you think he might do?
It might lower his
Mhm.
ask.
Yeah, as long as he's, selling above, let's say, the last level that he was here, I wouldn't be shocked if he's like, okay, well, let me get rid of it as much as I can in the market sell. Right. So that's how usually you get those little shakeouts and dumps, and then they will come back here and retail It's like, yeah, man, past resistance is now support, and then they start buying here, and then they drive up again to that guy level, and this guy's like, okay, well, I didn't sell all my inventory here. I'm just gonna sell it again.
All
And
right, so that also explains sometimes you see some of these wicks slightly lower at the next hit. Like your order doesn't get filled because you think you're gonna hit a retest, but it ends up actually getting eaten up slightly lower. Is that what's kind of
that's
happening there
exactly
as well?
why. Exactly what
Okay.
happens. Yeah, exactly what happens. Because remember,
Learned that, so.
even now, I'll give you an example. I'll give you an example how that works, right? When you think about a real life scenario. I was talking to a friend of mine. I mean, he's really wealthy, and he said, "Man, I've been buying Apple. I've been buying Apple between 230 and 236." And I said, "Well, I hope you're okay. Like you're not like hurting for money because think where he's buying." I brought up the chart to him, right? I did the same thing, like I just had more levels, more accurate levels. Let's just say that's 230, and he said 236. He's been buying. I said, so you've been buying in this range right here. He said it's a great price for Apple. What would you
Scary
guys
price.
tell him?
Terrifying price.
I mean,
He's
did
buying
he?
top.
What about like when it was inside the balance, right? When you're inside this balance, why didn't you buy at 130? I asked him. He said, well, because there's a lot of bad news in Apple. I laughed and I said, well, why are you buying it now at the top? He said, there's so much good news.
Oh no.
And I said, exactly, right? Because you want to buy where they're telling you to buy. And they're telling you to buy when it's good news. Well, what do big boys need at the top? They need a lot of my friends that like to buy at 230 to 234. When they start, so they need to sell liquidity. So now just do simple math. Let's say this fella has, I think he said about maybe 7,000 shares of Apple. Well, if he has 7,000 shares of Apple sitting here that he bought, well, let's say that we have another 1.5 million people that bought, let's say 15 shares each at this. And believe it or not, that happens, right? So now you do the math, right? And you multiply this, and then you look at, for instance, like Warren Buffett, a guy that, if you're not Warren Buffett's, that's been making money in the market. Well, if he's trying to get rid of it and he's been selling, who's been he selling it to?
Your buddy.
My buddy, because my buddy keeps buying it. Because now my buddy, if he wants to make money, like he did from here to here, let's say from this level to this level, that's 80%. My buddy doesn't realize that now he needs to go somewhere around here for him to make the same amount of money. Is that possible? Yeah, certainly. I'm not disagreeing that it's not possible. I'm not going to judge the market, but the value for your money where you're buying is not in alignment with what potentially will happen to you. And same thing with Amazon. I got few notifications, right? We talked about this level last time that, this is going to be a big level on Amazon. And we said in our last stock scan that we wanted to short below 191 and we wanted to hit 158. Does anyone recall that? It's in the notes in the share tracker that we wanted this
I
to
do.
basically to come down here. And we said if you lose this level, that's opening up the dump to 95. Would I buy shares of Amazon at 95? Oh yeah, I'd buy them at
Definitely.
95, but I would not buy here because it happens to be the biggest shareholder also is selling the shares here. Why would Jeff Bezos sell shares at 200? Well, because he's maximizing the
Bought at the
profits of
bottom.
the shares, right? He's the founder, so his average is what, like $4 or $5? So for him, it's like, okay, thank you guys for breaking at 200. Thank you for doing that for me. And then you look at the buying that's been happening, right? That's why volume is important. Let's say that this was the previous all-time high here, I believe, on Amazon. So this was a 201 is a previous all-time high. And you look at this candle here, right? That looks like pretty big volume. And then you see the second candle as you're going up. volume is going down. You know, if you've ever been in an auction, right? When the price of a car, let's say you're buying a 911 and the price rings 200K on the auction, are you getting like 1,000 people bidding here?
No.
If the average price is about 190 to 200, you're gonna have one or two guys competing for this car. And that means the auction is slowing down, that you're gonna get a final winner on it. And now as you're going up here, you're going up, 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 what's happening to the auction? Slowing down, because they're finding less and less of what?
Buyers.
Buyers.
Buyers. So eventually, right, these people that bought here, they're gonna be like, oh my God, like I didn't see that coming. It's because obviously they don't understand the market dynamics and the market theory of auction, where it goes. And the same thing happens in the footprints. It's just that you're seeing the orders match to the price on the ask and the bid. And that's exactly how we use the footprints.
When Jeff Bezos sells, does he ever buy again, or does he just sell?
He has no reason to buy again.
Okay.
The rich people don't sell their stocks to buy their stock back up. Maybe buy it at 90, but once they're out, I think they use that money to invest elsewhere or just live their life with billions. Okay, so does that help answer?
Yeah.
Okay. Then I did like a similar chart, kind of just break down and put it in the bullets for some of you guys that are not visual. So you'll have what's on the bid, what's on the ask. You have to treat it almost like a flea market, and that's pretty much what it is. Is people asking for something at a price and people bidding for something at a price. And the only way the transaction works out is if you have the highest bid and the lowest ask match. That's when you get a transaction. Does that make sense?
I think I have another question here.
Sure.
Why would an aggressive seller show up in the bid? Like what? I guess if he's hitting market sell,
He does show up on a bid.
so it does show up even if I'm just sitting here and I click market sell right now, my order would show up there.
Yeah. And if there's a lot of people that are on the market sell, for instance, let's take a look. If you go on 30 minutes here, and let's just look at the data, you'll see, for instance, there's a lot of people showing up on the market sell earlier. So you see these guys? You see these orders right here? So zoom out and you see the massive orders here coming in. And let me just change this. All right, let me give you a better view. All right, so okay. So pay attention to some of the stuff that you're seeing here, right? You're seeing buying coming in, right? At 230, they're pushing higher. There's a cluster of volume here, right? And then you see a nice completed auction with a zero on the left side. Then you have a lower high. And then what are you seeing here? At the top, we completed the auction and what happened immediately after. The red signifies on this chart that there is an aggressive seller at the top, right? Then you follow, and then there's something kind of cool happening here. Right, there's a lots of sellers right here. Can you see it? Can you guys see it? A lot of aggressive sellers showing up in this cluster right here. And what did they do? Well, they went down, right? They tested this double HVN, double POC. Funny enough that we just talked about those zeros, right? What does that signify? Is this
A
aggressive
completed
seller?
auction. No,
Is this aggressive sellers here?
buyers.
How do you know?
Because the zero indicates that the auction was finished.
Yeah. So when you think about it, these people got filled, right? They got filled on the bid side, and these guys here, they're going to be looking for hope to go lower.
So those are limit buys, right?
These are 100% limit buys.
Yeah.
So they bought them, and look how the price reacted to this. Just let me highlight these guys. This is being identified as a stacked imbalance, right? Stacked imbalance means, and this is just part of the course now that I'm adding pieces to your guys' puzzle, is the ratio between, let me just remove this. The ratio between the horizontal, vertical buyers and sellers is more than 4-to-1. So, 401 to 0, of course, is, a lot more than 4-to-1, right? But you have these orders come in at different levels that are not necessarily zeros. Like if you look at here, you have 98 to 473. How much is 4 times 100?
400.
It'd be 400. So that's why this order is highlighted. It's telling you that there was a lot more aggression on the bid side. And then relative to the price action, it highlights that that bid was pretty aggressive at this point. So these become your sellers. And then when I zoom out, I'm looking on the left side, right? This part of footprints. This is telling me what? I mean, guys, I am all-time highs at 6,007. And I'm getting a delta negative 9, 12, 15,000 delta here. You think it's limit buyers at all-time highs?
No.
Nah.
No.
So let's visit the concept of Amazon, right? I will tell you this, and you guys have to, whether you stay here or not, you will never match a long-term seller with a long-term buyer. I have never seen it. And I'm sure there's others like Jake that have seen that stuff, but I've never seen it in my life. For instance, SMCI. Is this a great buy for SMCI? Right here, where we are at right now? Let me give you an idea, for instance. So last time we accumulated right here, look what they're telling you right now. If you're gonna buy this stock and you trust that their accounting stuff is gonna be resolved, is this the level to buy?
Yeah.
This is a hell to the fuck yeah. This is where you risk your money. Your money being risked by idiots in this area. Like it's just the dumbest thing I've heard. And when we are trading up here, I think that this company did split. I remember it being, maybe I'm thinking of something else. I'll find out. Well, yeah, this company did a split. I remember it being like through the roof. When it was at all-time highs, I said this is a $15 stock, and I have it in the Discord. First of all, because they had a lot of weird financials that showed up on their reports on 10K or so not. But then you had this, right? You accumulated from May to, let's say a year. From that, you had a massive imbalance. Did you really think that this just goes on forever? And then you're going to come at this level right above this demand, and that you're going to rip higher into the, as my friend said, a gap, a volume gap shelf, whatever the hell he called it. Well, no, of course not. I mean, typically you're going to go lower to this auction, and this is where people lost money. So people that shorted right here, so many people probably bought shorts right here. Probably bought a bunch of shorts here. And look at this candle here. For instance, this candle, if you look at it, right, on a candle like on a daily, you can't really tell what's going on. You have 4 factors on a candle, right? Open, high, low, and close. But when you zoom in, like we did, for instance, here, I'm able to see what is happening, right? I see a nice closed auction here at the top, finished. And finished auctions are identified by a 0 on the bid. How are the auctions identified on the bottom?
You ask.
You want the 0 on the asks, right, to signify. But when you see a bunch of zeros like this, right, and I'll give you a little hint. Each candle, like this one, will have its value, right? So when you see these dark areas for me right here, right, and then you look at, for instance, there's a couple of the spots, right, that you can see. So I can say that the value of this candle right here is right here. Anyone disagree? So that's the value of this candle right here. So now let me give you a hint. When you're trading footprints, if you get this setup here and you immediately, let's say we all open it and you below the body of the candle, you get a bunch of these zeros, high odds are what? You're most likely 80% of the time go to the top of the other side. And what do? Went to the opposite side, right? Because this is the body of the candle for 99% of the time. If this happens below the body of the candle, no, it's a stop run. Most likely we auction away from it. Because these guys are being delivered pain, right? And then you see, right, that imbalance, even though it looked bearish, this is actually a bullish imbalance because it occurred on the bottom of a candle. It's a stop run for the bears, and it became a buy. And then look how we traded the rest of the day. You see this?
Yeah,
So
it
let's
never went below.
so a lot of people that are learning these footprints, let me see. I'm just gonna extend it, right? Look how it traded. Look, we got sellers again here, right? They picked up, they went through it, and this is a nice imbalance here. You see it. This is actually a pretty decent imbalance, but this is, I would say, an overnight imbalance, right? So the volume is not gonna be as big, right? Then they auction lower, and then here, this is the classical what? This is, you should pick this up because he does it a lot. What is this telling you here? Well, let's start with things we learned so far. We know one, that this completed auction. Then we know two, here they dipped lower with another completed auction. Then on the bid side here, they started selling aggressively, met the same force of buying. So you have a couple of aggressive people at the ask and a bid, right? Fighting, but they're fighting inside the value here of that prior candle that sold. We dipped below and immediately went inside. So what is that telling you about selling on this?
Slowing down.
Slowing down, getting absorbed. So now you pay attention to the bottom. I'll cover this section now on the bottom. So you're looking at volume, delta, max, min, and CVD, cumulative volume delta, right? So I know this is after hours, right? 5:30 in the morning. We came here. The volume picked up nicely. The aggressive selling is kind of slowing down. And you're looking now the next candle, right? The volume cuts in half, but what happens to selling?
Grinds nearly to a halt.
Yeah, it's almost to the halt, and then we can add something here to prove that. Let it build up and see what I'm drawing here. It'll give us a nice little delta profile here soon, as soon as it becomes green, and that's gonna tell you where the aggression came in, right? So now you're able to see where the aggressive people showed up. So look here, just pay attention, right? Remember, on the bid side, who do we have? What type of participants?
Aggressive sellers, passive buyers.
Okay, passive buyers and aggressive sellers, right? Remember, it's relative to the context of the price and other candles. So now when we came here, what are you noticing here? It's a lot of red delta, right?
We're not going lower.
Okay, then a little bit more red delta, but look at the volume. It's cut in half, right? Do people like to sell at lower prices or higher prices?
Higher.
Higher.
So if that's true, then you see here, as soon as we went above this level, what happened to the buying?
It's up.
Yeah, I mean, I would say it's nicely up. So now you can hide this, and now you can see the candles, right? Candles with delta, right? You're able to see where this is happening. And here's this guy again. The problem most people have with trading is that people create something that they want to see happening in the market, and they play that over what the chart's telling them.
Yes.
And that's the biggest problem in trading. All of this, guys, give me 3 to 5 months. I promise you're going to be better than me. But your problem, most people's problem, is listening to the chart instead of your feelings. And, good traders and mentors will tell you your mental toughness has to be better than your emotional. Once you have mental strength and is better than emotional feeling strength, you're going to become a successful trader. And that's this reading and making assumptions of what you're seeing. How many people would have hit market sell here? Oh man, we made a lower low, right? They dip below. But look at the interest in selling at the lows. And where's the body of the candle? It's all the way up here, right? So when you see lower volumes here and prices grinding up, or a big volume and prices shifting higher, what is that telling you? Think in terms of value. If something drops below where a majority of the action went, and there's a lot of volume, but the price is not going in the direction where it went, that means it's below value. Somebody's snatching that up. And the same can be said, let's kind of go back. Yeah, let's look at our friends. For instance, look at these guys. How would you know that you have a massive person buying here at the top? If you just looked at the candle, if I hide these step profiles, how do you guys know?
The wick.
I don't.
Well, I mean, at the time, you would not know, right? You can look at it
Yeah.
now, but at the time, there's no way for you to know what's
Mhm.
happening. So when I turn the cluster, right, I'm able to see the majority of the action happened at the top of this candle. So let's just highlight this for a moment. Go with me. Majority of the action happened here.
Mm-hmm.
Okay, I'm gonna go back and turn this off. Hold on, but
They're trapped.
you said majority shorty happened at the top. Why are we below? Well, because those boys were selling to these guys at at the ask. So the delta is shown as positive, or it could be that it was market buys. But how many times did they auction successfully above this level here? How many times did they go? Well, they went back to this level, they came back to this level, they went back to the top. And look at these fellas here. Again, a lots of volumes was at the top here. And it happened not in a body section. So what do we say about what do value people, long-term participants, like to buy or sell? Do they like to sell low or high?
High outside of the value.
Outside the value. Well, the body of the candle is here, and where's majority of the delta? Outside of the bodies.
Yeah.
So that should be something that you guys spot on immediately, right? And no way you can tell this without the footprints. Does everybody understand now why the footprints? I was leading you to this.
Mm-hmm.
And you look at the price action here, for instance, look at that. Like all of these guys are buying, right? Or they're gonna be crying on Monday or a few days. Then you go, to the right and you see what happens. And I think we explained this chart the same way. You look at this, right? There's some selling here, right? They slowed down, right? They completed the auction, they trapped, and then they immediately came back inside the body here, and then they auctioned higher, right? This here is very difficult to trade for anyone right here at this 6,000. This was a nice bearish candle. It picked up steam. This is actually a good setup to go short. How would you know not to go short here? That's pretty difficult. And that's why a lot of times when people play the middle of the chart, it becomes difficult to judge that. But now let's take a look. For instance, I'm just gonna hide the step profile for a moment. So I can go here. Well, let's take a look what happened. So we talked about the value, right? The value of this candle, let's say it's focused on here, right? Then we went above the value and they built what? Above the value.
Value.
They created a little value here. So then we auctioned above, right? And where did they come back? Let's see. See where did they come back? See right here, where did they come back? So if, for instance, you want to take this long, where's your stop loss?
I have to be way outside there.
It would be outside the value of these two candles. A little bit below, and you put it, if you want to be safe, you put it below this completed auction. So you're risking 3 points and 25. And now you talk about how would I trade this? Where would I target this? Well, if I'm risking 3 points from this entry, I need how many points?
9.
Which would put me at 607-ish, right? Which would put me right here. And then if I looked at this, where's the massive delta sitting? Then you can take your trade there and you're good, right? And now you look at this, right? Look at the volume here. Comes 930 candle volume, great, right? They open and they're like, man, forget these people. We're gonna buy them all up. So these overnight sellers probably got the short on this one. Then they covered, right? And then you see where did they come back immediately shortly after they opened at 10. I'm just gonna zoom in on this so you guys can see it. And I'm gonna change this guy to delta, and let's see. So as soon as they, they had a lot of stuff here, and then the values below here, they came in below, and what happened? Now the perception is that this is value. So now they bought it back up, and you look at the volume. So a majority of the volume, and this is a double distribution candle, if you guys can't tell. You have a lot of volume here, skinny belly here. So it's called an imbalance candle, right? And then they proceeded to auction, but pay attention as we auction higher, what's happening. Volume is drastically, it dropped in half by 11 o'clock. Then you see that there's some major slowdown here. And what happens here at 12 o'clock? This is a rare to see at noon. A really good sell-off comes in with more volume, takes off quite a bit of shares, right? And you zoom in and you can see, right, they started aggressively and majority went in here, and then there was a big fight in this area. Again, they came back, absorbed those sellers, and they pushed higher, but look at the absorption on volume. Lunch hour usually doesn't carry, but 1 o'clock comes in, and then here comes the buy program again. And look at this, double stack POCs, they pump it, reach new all-time highs on the market. Volume drastically drops again at 2 o'clock, picks up again at 2:30, they swept. But now pay attention to here. Let's see, what is telling you here something like, oh crap.
Stacked ask. Looks like they are.
So now you put this chart right here.
Inflated ask is what you'd call that, right?
How's the ask looking here? That would be who?
Passive sellers.
There's a lot of passive sellers sitting at that level, right? Right here. And then from there, obviously, they were pretty eager to get rid of the inventory, and then they just kept going. They came back to these levels. And of course, fight continued here. And now, I think they closed somewhere around here. But look at this order right here. Does this not stick out for you guys?
Someone's buying.
Well, relatively, you're right. But compared to where the price is he buying or she?
Oh, that's where it's always tricky. It's technically lower, but like it's right there.
Yeah. So what you want to see how would you play this? At least how I would play this. Let them go here, then come back, and then I would look for an opportunity to go over this guy. Is there a chance that sometimes I enter immediately when I see orders like this? Yeah, I do that, but that's a scalp, right? But if I was to see this, then I'm like, okay, well, give me those imbalances, and then it becomes a nice opportunity for a short. Let me give you guys a view. I'm just gonna delete a bunch of stuff. There has to be some imbalances here. Let me make sure I have them enabled. There's no way. Yep, they're on. Let me find some on 4 hours or something, and then we'll go.
For some reason, they don't really pop up on ES that much at all.
NQ is usually notorious for them.
Yeah, I looked for on ES
Here.
like wasn't it?
Here's NQ, right? So NQ has a bunch right here on 30 minutes. And typically what you want to do, especially if you're scalping, right? You could go on smaller time frames for scalping as well. And you can look for imbalances. I'm pretty sure we should see some here at the top as well. Not that aggressive, I guess. There's some here, but they're not highlighting. There's a 4 stack right here, and then they came back immediately. So if you're using 5 minutes, don't play it like it's a 30-minute chart. So if you look here, there's a nice stack of imbalances, right? And what they typically, the way I play them is, if you go higher, like you see how the imbalance started here and they went higher, and look when they came back. I guess 21,139. And then, I mean, it went about 40 points from that. And that's, I would say, between 20 to 40 points is what you can use on 5 minutes.
If you have like your market profiles telling you want to go long, and you see that it's so good.
Oh, it becomes money, honestly, every time.
That's like the best one for NQ, I think.
So here's a sell right here. And this one's actually looking pretty good. Look how this one worked. So they started, right? So they're building a little consolidation at the top, right? You see that there's absorption happening. You guys see that? So you're going higher. There's some orders coming in. This looks like overnight. Yeah, it's overnight. So there's some overnight action happening, but you see that they're stuck, right? And there's aggressive sellers coming as soon as they reach the top. And then you see some initiation, meaning that there's initiation of a trend. And that's what happens here. Typically, the way you want to play these stacked imbalances, it just means the ratio, the way I have it set up, right? If you look here, it's basically 3 to 1, 6 to 1, and 9 to 1. Sometimes people put different colors. You're welcome, to do that. I can make it this way, and then I can make another color. I don't know, this one. I can do this and see kind of what it looks like, right? And it would highlight these different levels, different colors. I just keep them typically the same colors. So now if you look at this, this works like magic on NQ, but it does require a lot of patience, and you're basically feeding, you're almost like a vulture, right? You're waiting for somebody to do the kill, and then they leave their food, and then you're like, okay, I'll take the rest. And that's what you're doing here, right? They initiated this right here. They went lower, they consolidated, they have a bunch of shit going on here. Now look, out of that balance, what did they do? Well, they initiated and they went straight, literally to a penny, to that short level, which was what, 2150, and that gave you quite a bit of points. Yeah, that would have been a nice one. So are you guys okay with stacked imbalance so far? Any questions?
Shorty, I've been trying to learn this, right? And what I've seen happen that I do is, because there's so much information, I'm trying to execute away from like the TPO and value profile levels, right?
Okay.
Because this stuff that you're showing here is, we're not even talking we're at value area high, or we're wherever. We're just looking at
Well,
shorter.
you
Yeah.
want to use market profile in correlation with this, right? I mean, you want to know where the levels are, where the extremes are, right? So if I look at NQ,
Aryan, serial dude.
if you look at NQ here,
Aryan, serial dude खाई चल.
somebody has to go on mute, guys.
It's fine. It's chocolate. Finish it.
So if you look at, for instance, on NQ here, and we'll just go on the daily time. Let's just increase this to about 5-ish. Okay, so first thing you can see here immediately is that the auction is stalling, right? It doesn't take too much for me to realize that we're taking a little breather, right? Is there a chance
Yep.
for a pullback from here? Definitely, right?
Mhm.
So now the levels, I have no idea what level I was on NQ, but let's say I would have marked this level here as a potential key level to watch, 2130. That was previous day value area high. And when you zoom in here, you know, maybe it looks like a poor high, right, on NQ. So this would be a poor high at 2153. So I know they might want to auction above it, right, to fix it.
Yep.
So if they come here, they crack, there's a high chance they clean this up, but then I'm looking for failure in that area. So I have no idea where those levels are. As you guys know, I'm not that big on. Okay, well, 21.2, what is this? 21.250. I'm dyslexic, so that one is 21. Yeah, that's the same level, 21.53. So now 53, and look where the imbalance is happening.
Yeah.
So the reason why I use market profile is to know where the extreme levels are. And this was telling you a story, right? I mean, I would say this was a pretty good story on NQ. You have a value area from prior day that's here. You open in the top portion, which means what? It's fairly bullish, right? I would say that you're opening above, you know, the POC here. You're spending a lot of time here. Then we could add another dimension, which would be the volume. And I can see where's the majority of your volume happening. Well, you're spending a lot more volume at the higher point than you are where you're spending a lot of time. Right? So you spent a lot of time here, but your volume was at the higher level. So that's just something to note, right? Why would you
Yep.
spend more volume higher than where you spent time? Could be two ways, right? Maybe you're trapping somebody, you're giving them a look, and then you go higher, and then you sell it to them at the higher price. So let's say tomorrow on NQ, you lose this level, 2116. Where do you see them going? What would be the level of your interest for you?
Where you spent the most time?
Well, where you spent most of the time, but also your 2-day values right here. I didn't want to lead you guys to it directly, but I know the 2-day value area low is on the bottom. Let me change the color maybe to purple. You see the purple line now, and the POC are kind of right here. So if you lose this level tomorrow, this is the trade that I would look for. And what would I expect to see between, let's say, this 220 to 208 level? What would you guys expect to see? A lot of volume?
Yeah.
Yeah,
POC.
that's the POC of 2 days. So I would go to 221 to 220 to about 208, and let's just look at the price action, right? So let's look at it. So 220, somewhere around here, right? It starts to build. Look at the price action here. Let me just go a little bit higher time frame. Yeah, they have a long ways to go down. So let's just put a level here. So 220 to about 208. I'm just gonna put this good enough for me. And now I look, anytime that happened, right? I'm paying attention to see how much really time did they spend. So if they spent some time above it, right? I can see that they've spent some time above this. And what happened from above? They sold off, right? Then I see again, they peaked above it. So now I'm interested to see how serious were these guys, right? At 5 a.m., whatever they were selling, right? So they're the one that initiated this selling last time. So not a lot of volume, right? Maybe after hours it doubled, but somebody sold that off, and now we're above it. So if I'm looking here now during the real session, cash session, where did the buyers come in? Well, just look at the POCs, for instance, on these candles and what's happening. They're pretty stacked here. So majority of the volume was happening from here. The initiation was around maybe even 200, 200. So what I would do here is I would look at this price action, kind of put some delta and see where's the aggression coming in at what level, right? And I would probably increase this to about 7. Okay, so what would you want them to lose if you're a seller? I'll give you more data so you can be more informed. So where's majority of the buying happening? On the delta,
yeah.
a lot of buying is happening here, but is that buying? If it is buying, they're trapped. It could be also limit sellers getting their orders filled on the right side, right, at the ask, which is most likely, I would say, the scenario. And you see between these big nodes, right, how the price trades. It's basically 2 candles between this one and this one, this one and this one. The next one is here. So let's say you lose this, what is this level right here? 16. And the level that we set on this chart was 16 was the POC, right? Now you lose this to 16. What are the odds that you're gonna go visit? I would say 2198, pretty high. And then ultimately, you're most likely gonna come back to the next liquidity zone sitting at 186, which would be what, 40 points?
Not bad.
Okay.
Shorty, on the left, is that the daily delta, or are you using a different time frame?
This one is full chart range. Usually on the right side, I would do, in this case, you would do previous week just so you can see it.
But
usually right, left is full.
yeah, but as we're trading up there, what on footprints are you looking for? You're looking for completed auctions
Well,
and aggressive sellers.
Yeah, one of them is completed auctions. I'm looking to see absorption, for instance. So let's look at, just focus here. Is there anyone that's something that sticks out here?
There's that big red delta up there.
That big order, that 1,036 order.
What about this guy here at the ask?
Yeah, that's what he said, 1,036.
This guy here is pretty big, right? And they came back to him and man, it basically peaked above by what? Few points, 3 points. And they sold off from there, and then volume picked up. What is this? 2:30 p.m. on 30 minutes, and then they went more and more, right? Aggressive on it. So for me, I look for orders on the ask side as you're approaching. I mean, we're like a little bit of uncharted territories, right? Where you're at all-time highs, but I'm looking to see where are these orders coming. So this was 1:30. Let me go in like 5 minutes so you can see it.
So you're looking for orders on the ask, not on the bid.
Right, look, when I'm looking for tops, I want to make sure that it's met with sellers. I want the orders first show up on the right side, like this one. You see 445, 348, and look at this cluster here. Completed auction, and then they never basically went even above this right here.
I think that's where I'm getting confused, because I would have expected we're at the top for aggressive sellers to show up, because that's where they participate.
Well,
so we would
hold on. Let me fix your thinking.
Yes.
Okay, let me fix that. When you're auctioning higher, and I don't want to drop my price for you. You want to buy an iPhone from Shorty. I have an iPhone 16 now, but it's Shorty's iPhone, so I'm gonna add a markup. It's $3,000. I'm not willing to sell it less than $3,000, which is here. I'm sitting on the ask. I'm not dropping my price. You're gonna have to do what?
Take it.
You're gonna come here and you're gonna fill that order. So that's exactly why I'm watching for the ask, to see, especially at all-time highs, new levels, big levels. I'm looking to see if the limit orders get filled. Limit sell orders. And look at the
Yeah.
imbalances that you have. I mean, this is pretty good, right? I mean, this is pretty good here at 21, what, 21.26. There's a lot of selling happening, right? And then, majority of the volume happened here. So you're gonna fill this fairly quickly from here.
Okay, so yeah, that right there, to me, when I looked at it, it's like, okay, we're above value because we just saw that on market profile.
Mhm.
And I'm seeing, potentially sellers up there, but not aggressive sellers. I'm just seeing passive sellers.
Yeah, I mean, passive sellers, remember how the market will work.
So you're
Is
looking for absorption of the buyers. That
Exactly. So think about this. Think of it this way. I have to get rid of NQ now in chunks, right? The big boys can't get these orders filled like me and you get filled.
Yeah.
They're gonna be sitting with limit sell. They're not gonna move their ass that much. So now this guy is like, okay, well, let me give you one of my boxes, right? And he's gonna start selling at that level. That means he made money, and now he's looking to sell it. So he's like, okay, well, here comes a box at the ass side, right? So it looks like this. And he's like, okay, well, at this level, I'm gonna release 1,500 contract. So this is the ask, this is the bid. So as you auction higher, you hit market buy, and you're like, okay, at, I don't know, what was it, 21, 250. Let me make it more realistic, 21, 250. I think that was the level that we had. At this level, we hit this order of 1,500 contracts. So these guys are buying with 1, 2, 10, 15. Until they don't take this order out, what happens?
Price
Can we
stays
go
the same.
higher?
prices, yeah,
No, prices.
price doesn't go up. Yeah.
Yeah, so let's take a look. As they're bidding here, they're bidding higher, they're, becoming aggressive, and you can see that they had some aggression too, right? They come out of these pump, they come again, they pump, they came here again high, and you see aggression, right, coming in. They're trying to go higher, and look, they came here and they hit a really large orders coming in. And basically then, if you're hitting large orders and your price is not going higher, well, maybe you are hitting a supply. And there's not enough buyers, aggressive buyers, to absorb that. So then you're watching to see, well,
Go down and try again.
Can you try again? There's aggressive sellers showing up here, right? There's sellers pushing and they succeeded, and then they came back to the prior balance, right? And this would have looked like differently on a candle chart, 2136 to 21,236. So let's look, what happened in 21,236, and we probably have to go on smaller candles. Just go on like 10 minutes. I'm just gonna delete all of this so you can. So I mean, the price action here is, I would say, pretty shitty at the moment. 21,236, right? Right here, right? Is that what I said? 21,237 to 21,226. Okay, 21. So look at now. They're coming here. They popped from this balance, if you want to call this area, let's say right here, right? They came in here and they're trying to basically create some balance in this area, and you see it here pretty clear now in 5 minutes. They went out of that balance. They came back right here at 155. So this is 155. And look what they did. They're like, oh man, we want to defend this. This value is higher. Well, they went from there and they went again to our guy that had the massive ask. And how much auction did they have above?
Yeah, not much.
Not much, right? So not much, but at this time you still see some, this is a 240. This should be picking up volume. but you're not seeing the same order on the ask.
But
Right?
would you have taken that even though there wasn't a completed auction there with that at the very top?
There's a completed auction here, right here.
But the most recent one, that 522 on the right side.
Yeah, but they never peaked above this one.
Oh, okay. Yeah.
Yeah, so, this one, they came back here and they're not able to, right? So they came here and then they sold off again and they put in a lower low, right? This was the last low right here where they came in. So now, is this a change of character on 5 minutes?
For sure.
This is 100% change of character, right? And when you compare the value now, right, you just extend this. So now when you're thinking about this, look at it. I mean, the trading here was pretty garbage, right? They tried to auction higher, right? Let's call it the penthouse. They went value wise here. They didn't like it, right? And then when you look at the 2-day profile, I guess the 2-day value area high was where at 2152, right? So they got stuck there, which was prior day high. They peaked above it a few times and they didn't like it. And they bounced from 2-day POC here and a lot of volume there. So now if they lose this value, now think about it. The prior value was built here. Following?
Yep.
So this would be the top portion, this would be the second portion of it, right? So you can simply find, you crack inside the 199 level. I would watch for 199, see where is that. So at 200, if you lose this level, right, there's a high chance that we would say you're gonna probably go all the way to 2159. And then I would just take a look at price action around this level here and see what is it that they're doing at 2159, probably in 30 minutes. And that would be somewhere, let me just draw a level so I don't lose myself.
So the footprints actually help you get, but if you know how to do it, really good location, right?
Exactly, that's a pinpoint location for, what am I expecting to see and am I seeing it? So for instance, here, last time we came, there was somebody that tried to bring the market lower and look what happened to him at that level, right? So at 2159, should you short here? Probably not.
Yeah.
It should not, look short in this area right here because the value is shifting higher day to day. Value was here, they shifted, but in a trend, when you're shifting higher in a trend and you have an overlapping value, is that bearish, bullish, or what is it telling you?
Slowing down.
Well, it's just telling you the auction is not finding net new buyers right now.
Mm.
So now when you look at it, right, this is a really good setup that I like, as you guys know, you have two value areas that are kind of stacking here, right? And to me, I would say if they go above tomorrow and they lose this becomes an easy peasy all the way to here. Right. And you can definitely, if you want to protect yourself, find a level in 2160. I would probably trim here majority of the position. Right. I would trim right here, and then I would also look for that prior day value to be somewhere right here. And this is all you need for NQ, for instance, for tomorrow. They're trying to hold a top, but once they lose this, man, it just becomes potentially a flush.
Yeah. Just a final question. Burnside is always posting these footprints that is like, a bunch of zeros, and then a bunch of red numbers on the ask and a bunch of zeros on the bunch of red numbers on the bid. That would be the opposite of what we're talking about here, right?
It would be the same, right? He's just showing you the aggressive participants coming in at the bid or at the ask.
Yeah.
So if it's aggressive buyers on the ask, right, then price action is going higher. And obviously we've seen that a lot lately. So let me go find some. So let's take a look, for instance, on this guy here. So here's your aggressive buyers coming in, right? Right here. So let's kind of analyze this, right? So you see the price actions picking up, selling's picking up, selling also picking up, but you see that there's a little bit of fight here, right? There's a little bit of fight. HVN's being built. Incomplete auction, they go lower. Incomplete again. Aggressive sellers coming in. they drive it lower, but then immediately look how quickly they came back above these guys. You know, they didn't spend a lot of time below. And anytime you went, you know, when you look at this one here, so the value of this candle is probably, you know, this is your tail, right? And then you look at this one here. So this is, you know, below value here. Now look how aggressive they showed up, aggressive buying immediately here, right? This is what, in the morning, at night at 7:30. So you can't expect volume, right? Relative volume. So they came back and they bought it below the value. And then look at this guy. Well, they absorbed all those sellers with market buys right here. They bought them. And now I don't think we've been to this level yet. I don't think we have visited this level. So let me make sure. Yeah, we haven't been to this level, so it's only 300 points away. All right, so if they're to come to this level, I would expect that there's going to be a little bit of a fight, even though that, you know, that if this retest comes during cash session, I'll be careful because this was also during a non-cash session, right? The volume is not necessarily as big. To defend that, it would be easier to break. But that's where the trend started, like from here. They started selling. For instance, take a look at this order. Wow. It stuck out even when I was zoomed out. Look at this. At 4:30. So
So
pretty
that's an
big.
aggressive seller.
That's an
right?
aggressive seller. Exactly. He came in and hit and he's like, man, let me get out of my position immediately.
Yeah.
And he sold off. But look what happened prior to that. That's why I say the context
Yes.
is important, right?
So those guys were trapped. They're probably offloading over there, right? I said, oh shit. I
These
got my
guys
way
got
out.
they got destroyed because this guy started buying aggressively right here at the top once they broke, right? You see this?
Yeah.
They broke the high and he's like, ah, hit the market buy. And he's like, yeah, please do. And then he got destroyed. And you could check that on step profile here. Let's go 30 minutes. And let's take a look here. We'll change this to delta and let's take a look. And now you'll see how that played out in terms of delta, right? And it should point to a massive order here at 934 as soon as it works.
Hey, Shorty.
Mm-hmm.
What made you have a short bias on Friday?
Well, I'll cover that in a second so you guys can see it. Well, values cannot overlap when you're trending. They should not have a lot of overlap. That means you're coming to a stop, you're gonna balance, and most likely you're gonna revert back and find the value buyers. And I'm just looking to sell and I can become a buyer. But I don't buy, I'm not bearish. I'm just not bullish for my long-term portfolio to buy to add to my portfolio, if that makes sense. As a long-term investor, I would never buy here. I would never buy Apple here. I would never buy Amazon here. I would never buy Tesla here. I told you exactly what Tesla was going to do, and it did it to a penny even now. You have to align with majority of the market. And I'm not bearish on that, you know, NQ or ES, like long-term bearish, but I'm not looking to be a long-term buyer here.
Yeah, but we were. I mean, I was short too. I took a couple of losses. Say honestly too.
Yeah. So look now here, if you guys look. So let me just. So here's your candles, and look what happened here. So we know now, if you saw earlier, right? How would you know that there's a seller here on a single candle? You would not. But then you look at this, you know, negative 82 on the bid side at basically the high and the sweep of these candles. When you usually see that, that usually means they're about to trap somebody here, right? There was buyers coming in, met with the double force of selling, and then they offered it lower, right? And then you can see also some people came here. There was a lot of selling in the body of this candle, right? There's some buying here, not as much compared to this volume, right? You see majority of the volume happened where?
At the top.
At the tail, right? And then they tried to drive it back off of these candles because all 3 of these candles have a lot of selling outside. Then they tried to break it, and you see how much fight they've been having. Kind of selling right here. And then they bought it here. There was some exhaustion, but look at this one. Where they got lost, the bears, the next time they picked up. There was no volume here, right? They open here and they closed at the lows.
Yeah. Okay, more work for me. Appreciate it. Thank you.
No, I mean, I would say you have to start building a story and looking at, candles, looking at delta, right? So if I was to switch back to clusters, I'm able to tell, right, where are these orders coming in? Who's coming in? Where's the value of the candles? When you peaked above the value, what happened? Well, this is a really good example here. So this is the value of the candle right here, right?
Yeah.
What happened outside of the value at the top?
People are buying, trapped.
They were trapped. And then when something goes above value, people like to sell. They sold it. And then once you dipped inside, it doesn't mean you have to get an entry right here, right? But you could have taken the short once you're inside here. When you put in the lower low and you clean this level up, could you have taken a retest short? Let's say, if you're playing the value game, you could have taken a short of 60.50, and that would have been a decent short. Your trail would be point. A drawdown would be a point, right? On NQ, that's unheard of. Usually my trails are much bigger than that.
Yeah.
But you see, for instance, here, there's lots of selling coming in, right? So there's lots of selling here. Then the buying that happened here below value, does that look good to you on this candle?
Not a lot of volume.
So below value, they didn't buy. They bought a lot in value, and then they pumped it on the next candle. If I was thinking logically, where should the buying have happened?
Below.
It should have happened a lot below. Then you see here when they're selling, right? They're selling below. They came into this previous cluster, right? That 910, 905. They came to the bottom of it, right? And then they didn't have aggression to go, but they did buy. And then they went higher back to the selling point. And now I don't know where we closed on NQ. Much higher, I guess. Yeah, and now if you just look at this, right, you're here, you consolidated, you sold off, now you peaked above again. I would think this was a perfect trap here, if you ask me, on this right here. Because you tried that the same here. You tried to do the same thing here, and you got some selling, right, that happened. Another selling here, more selling to break that balance here. Then they basically went back inside, then they sold off again, and then you see they got back inside. They absorbed these guys, but they were not able to get over this fella right here. Like right here. There are some limit sellers, right? I mean, there are some limit sellers showing up. And for us to finish the date on negative delta speaks volume, I would say.
Appreciate that. Thank you.
Yep. Okay, so that's how I correlate. That was a really good question, market profile and footprints. You're looking when you're playing market profile, right? So a lot of you guys are like, well, let's take a look at this. Let's look at 30 minutes. Okay, so when you look at this chart, who can tell me where's the value here? Here, 65-minute view. So here's your all-time high, right? Somewhere here, right? Where's the value lately here? Well, we know just looking at candles consolidation, you would think the value is somewhere, I would say right here, right? They're building value, they're happy trading, and then of course you get the news, the Trump, blah, blah, we're outside the value, we go to all-time highs on NQ. So now, right, first they shouldn't lose that all-time high level that we have. Did I tag the right one? Is that what you guys have? 2168 or something like that. And they're defending that, right? So let's say they lose this value here. What would that tell you in terms of value? Well, most likely they're not, they're not accepting the value above this. And it's not like we went, it's not like the breakout above the all-time high was, like something crazy, like whoop up. I mean, they're basically peaking above it immediately here. So in terms of value, they're still there. So they lose this, well, most likely you can see this on a long-term picture that this happens. And what I would expect to see then on the footprint chart is I would look to see this cluster that happened here and see where's that level where I can expect the buyers to show up, close your shorts, and look for a new opportunity to go long. Okay. So I do care for absorption, right? So, and you guys can see that there's, for instance, there's absorption happening here, right? There was a seller that came in here and then they absorbed here and then they sold off from that. Meaning, they could have gone obviously from here higher, but the breakdown was to this level. And typically how I like to play the absorptions, I like to play them on the retests. So this retest would have been nice, right? You probably would have made some decent money on that. And usually the first taps on the retests are desired when you're trading. A tool that I like to use, as you guys have seen me, I like to look at like specific levels and see where's that, price action happening. So if you look at this one, even on volume here, you guys will see, how is it that you could have shorted something like, let's say this candle right here. You could have shorted this multiple ways, right? You could have played it. Maybe you would have been stopped depending on what's your stop loss if it's less than 10 points. But you had opportunities, and then you had a multiple stack of HVNs along with the value area high 2041. I usually like to play these along with the imbalances, like stacked imbalances. I play the retest of them. And on NQ, honestly, I would say you guys can make a living playing stacked imbalances on 5 minutes on NQ. And usually NQ is much more loaded with imbalances than ES, I would say. At least when I look at the charts, I see a lot more green or red. Yep. So let me just make sure that you guys are following. So is everyone comfortable with absorption? You're coming to a point where there's a lot of volume happening, but if it's in a trend of down, you're not making lower lows. Then you basically are looking for aggressive buyer to show up or a seller that you can follow him or her. So for instance, in this case, right, you're seeing absorption and what happens here, look. There's sellers coming in, so next time on a retest that becomes good. And I probably would have been looking at this guy if I was trading NQ and look where they did. I mean, they came back to a penny. Well, they gave you nice points, right? They gave you about 13, 14 points. You're on 5 minutes, so you can probably manage that pretty well. And here's absorption on the bottom side, right? Same thing, right? They're selling off. You're paying attention to a few things. Volume is slowing down. There's a seller that's coming in right below the low. And then as soon as we dip below, look how fast we're bringing them in. And this is a trapped seller right here. And you're looking for some aggressive buyers and you want to join them after the fact or on a retest. And then, you want to look at this guy, for instance, right here. Day one above, and then you can follow along with him and push higher. Does that make sense?
Yeah, that's great.
Okay. Divergence and delta flip. So that's sometimes just like what happened here. Let's look at the daily, right? You guys look at the daily candles here on NQ, you'll notice that there's a lot of stuff happening in the last 2 days, that it's slowing down a bit, right? So if you guys look here, we had a lot of volume come in on the 11.5. They went higher, right? They accumulated here, and you see here losing 2100, 21,100 opens up the door potentially to a massive drop. I would say potentially even sweep this low here that's sitting, where was it? probably all the way to 28.6. And I think our value was saying earlier when we were looking in NQ that we were talking about somewhere here, 27.66. So that would make sense, right? If they come back all the way down, and I would say, yeah, that's a pretty good level to revisit. Okay. So on the footprints, we talked about stacked imbalances. These can be bullish and bearish. I look for them on 30 minutes first. If you're scalping, you can use 5-10 minutes, but I strongly suggest you use 30 minutes for them. Cluster volumes, that's typically leads to a massive volume absorption. And then we talked about just now with Tom on approaching support and resistance, and what you're watching as you're going higher, you're looking for orders that are coming on the ask side, right, where the limit sellers are, and then you're watching for follow through from the aggressive bid selling, right? Then you have the candle POCs. I touched briefly on that. For instance, if you guys look here, let's just remove. What do you guys notice about these two candle POCs?
Lined up at the same
To each other.
That's a pretty big level, guys. So now you're watching to see what happens, right? This looks like a really compressed profile. It's in the top portion of it. So now if they can bid higher than this, and let's say they auction lower here, well, on a retest of that, that becomes I would say a pretty good short, in my opinion. So I always watch for stacked, POCs on candles on 15. If you can catch them on 30 minutes, that's pretty beautiful. If you can find them that are nicely stacked. So let me give you one here. I believe I saw one. So for instance, if you guys look here, right, there was nice set of stacked, I would say here. Look, they went up and they came back pretty much to it, right? To this level, and then they proceeded to go higher. But man, there's a massive selling here at 21.26 here. Like this one would be a pretty, look at this level here. This is what I mean by stacked POCs. So just pay attention to here. Lower highs, and then they made a higher low. So they're consolidating, they popped, and look at the retest they gave you. I mean, this was, 3-4 points. That's manageable. And from there, I mean, this is where basically you took off on the market, right? You just went all-time high. So I wouldn't, I would expect buyers to show up at this level, which should be about 960. And 960 would be like here somewhere in the gap right here. Yes. Is that right? Yeah, 29.62. Yep, that was overnight. 961. So you would expect in the middle of the gap actually to see some right here. To see some overnight traders helping. Does that help you guys with footprints at all? And I'll share more live on the footprints. I know I usually share the other one because it gives me good information as well while I have footprints on the other side, but I can flip that where you guys see more footprints and commentary.
Yeah, that helped a lot. Thank you.
Shorty, I had two questions.
Sure.
The first one is when you say that, hey, did you guys see that large order? Are you looking at times or sales, or are you just looking at the footprints?
I look at both, right? So I do have both set up here, right? So you can go here and you can right click and you can see the time and sales, right? So I'll look at the time and sales, but I'm also, time and sales confirms, and footprints is also the orders that occurred, right? Neither one is L2, where I'm looking future bid ask. These are all orders that are executed. So typically I see it here and I'm just looking at time and sales and matching it, right, to make sure everything's okay. But I'm watching to see also the size. As we're going up, there's orders coming in. I typically filter this out like about 5, 6 on NQ to see, is there any large orders coming in, who's trading. And I usually catch it here as well as that time and sales.
Okay. And then lastly, I didn't get I know you posted it a couple weeks ago, but Can you send the link for me? I can copy and paste your template.
Yeah. I think I posted it. Let me see. It's under PowerPoint, Shorty PowerPoint trading. And
Okay.
it's right here. Yeah, it's right here. That's right here.
All right, got it. Thank you.
I think Tom might have copied it in. I don't know.
Yeah. Thank you.
Yeah.
Sorry, where'd you just put that? Sorry.
I'll tag it here so you guys.
Thank you.
Mhm.
So what's the difference between footprints and time and sales then?
Well, one fees is the same, right? Time and sales will just show me the orders that are getting filled. And footprints basically just chart it back onto the level. Like let's say on time and sales, I'm seeing orders coming in, let's say 2155. I'm just instead of looking on the left side constantly on the charts, sometimes when it's inflated already like a cluster, you might not see it. Meaning that let's say this 130 becomes 200. Would your eyes catch that? It would go up to here. You might not see it. But here, when I see a 70, on the bid side, and we immediately go below it, then I'm like, okay, I'm monitoring. Oh, a big order came in. Let me see how it fits in the rest of the picture that I have on this. Does that make sense?
And this is all brand new to me, so sorry for the dumb questions, but so footprints is like a combination of level 2 and time and sales in a way then?
Footprints is not level 2, it's the orders that have been executed. Level 2 is showing you orders that haven't happened yet.
Okay, and footprints is everything that's already happened.
That's correct. That's happening that are executed orders, meaning matched orders show up here. If you're to trigger L2, right? I look at L2 on toss. I'm able to see like when we had that 26 order on ES, that was basically off of L2. I saw that there was an resting order sitting there, which would be a limit seller.
Yeah, okay, I got you. I've just been focusing on volume profile and stuff for now, so this is down the road for me, so I appreciate
you
it.
want to start slowly, adding, because trading is not about guarantees. It's for you. How do you increase your probability that your trade is going to be successful? And if you figured out something on volume profile that's giving you a pretty good advantage, then don't complicate it, right? You don't need to learn this. For me, it gives me the edge, especially I hate trading all-time highs personally, because I always think of a rug pull because I'm protective of myself and my own capital, right? I'm not looking for a lot of points at all-time highs personally, longs. I take a little bite and, I'm happy with it because I don't want to meet, at a new price discovery level. I don't want to meet a limit seller that basically has, a couple of thousand contracts and I get hit and then, the lag would be so bad if he executes all of them at the bid. I wouldn't even get proper stop trigger. It would be a pretty good slippage. So that's why I'm careful when I'm trading at all-time highs a little bit more than usual. I don't like to do the price discovery, I guess, on my own at these levels. Okay. All right. Well, let's flip a little bit to talk about market profile. Most of you guys have had some experience.
Hopping off. Thanks, Shorty. Appreciate it.
So most of you have had some experience, right? Trading or looking at market profiles. And a lot of you guys probably are terrified because, when you look at this and you see a bunch of letters like, oh my God, what is ABCD? Just think of these letters, right? As basically every 30 minutes, the price touched wherever the letter A is. So if you look, for instance, on 30 minutes, even if I hide, for instance, the TPOs, the letter A is going to be from here to here. That's all going to be letter A right here. And then when I turn them on, you guys will see that. Letter B is going to be that it never breached A. It was an inside bar, right? So you see basically through the, I guess, what do you call them? Through letters, I'm able to see that. And then you see, right, you're basically consolidating here. You're inside bar after inside bar, and then they crack the high, and that was it, right? They just kept going. So that's what TPOs are, right? It's basically a graphical representation that gives you a different view of the market, right? And there are certain setups that we look for and certain data that's being produced out of it. And each letter, as you guys see, right, A is higher high. So this would have been what? If we would have stayed within this bracket, right? Oh, this one here, and let's say to the bottom, usually when the A period sets a range and rest of the day we stay in, it's called pioneer range. It's not really a normal occurrence that you see, but you see here we went above it. You know, we tapped some levels, then they went above again here and so on. But for instance, in this day here, each letter 30 minutes, and then you see lower high, lower high. This one had higher low, and this one just peaked below, made a lower low, and it has a lower high. So typically when you see something like this, you want to see all the bullish action happening above this level. In this case, it would have been, you know, hey, can you clean up above this POC, like this area here, that you can auction higher? And of course they said, yeah, sure, we'll do that. And then they went another gap. So just keep a note that you have, you know, how many gaps we have. 1, 2, so 2 gaps so far. Usually there's a 3 gap exhaustion rule. So I'll keep an eye on that, see how we open tomorrow. After 3 gaps, usually you take a little breather, and it's normal to retrace up to 5%. So now when you think about this, with the gaps, stock market's been almost 5% just on the news of a new president. Okay. So now when you guys think about it, there's certain setups that we look for, right? There are buying tails, there are selling tails, and that's what we're gonna cover to make sure you guys are at least can have a conversation. The more you guys use it, and the more you chart with it, the more it's gonna make sense. The A and B periods that you guys see here, right? This is called initial balance. So the first 1 hour, right? First 1 hour here is your initial balance. And you guys want to get familiar with that, right? Because initial balance usually can only be tipped by other time frame participants, right? And typically if you don't hold or close above that auction, let's say like right here, if you close above it, you're staying bullish. You believe that, you know, value is not here. This is not value, and you're found other people that believe the same thing, and you're most likely going to go higher, right? We do use an indicator called initial balance here, and this one basically prints the initial balance for you every time. And here's this one right here. So it highlighted the little box right here. That's the initial balance, and I'll also give you initial balance like targets for upside. Not, it would just give it to you for the current one, not the previous days. At least that's how I have it configured. So here's the initial balance again on Friday, I believe, right? You care about the size of initial balance. The wider the initial balance, the less likely it's going to be broken. So this one was 618 to 14. That's actually considered a small average, right? Typically 20-day average is 26 points, and today was 14. So usually when you extend an IB in the direction, right, on a small IB, high odds that you're going to go with it. And usually we're looking for C period to see how does it do with the initial balance. If the C period doesn't break it, and it basically auctions in here, high chance, you know, you're going to go to 2 o'clock or so, and then you're looking for potentially peak aboves and fails and so on, right? Peak below and fail and come back. If you happen to have a peak above IBH and you fail, and let's say you go below and you reclaim it, what is most likely to happen?
You'll end in the middle.
Most
POC.
likely you're going to close in the middle of the POC, and that would be a failed auction, and that would be a neutral day, right? That's where the day types from the PowerPoint would help you guys kind of connect the dots in that formula. But here, obviously, you guys see that majority of the value was built higher than IB. You have some buying tail. What that means, the buying tail is you see the letter A. It's almost like, you know, you have auction of B coming to the A. And when you turn on the candles, let me turn them on here. Are they on? Yeah, they're on. So here, if you guys look at this, right, you see that this candle of B really didn't encroach, so you would just draw basically this, and that means that this is a buying tail of that day. So then you will go look to the top and see, do you have a selling tail, right? And not necessarily don't need to look at like the candles and whatnot. You can tell as you get a little bit better with this that, you know, your selling tail is going to be somewhere right here. The high of J and then K period went above, but didn't close above. They came back and they closed at the lows, right? And then you see, you know, L period broke the J, and that's pretty much where what happened at 6:30 here. What happened here?
Sorry, framing down.
You basically change the character of the market for that period, 30 minutes. You had higher high, higher low, higher high, higher low. Then you know, you obviously broke the K low, but then you're below the higher prior candle and you're below the low. So the L period basically changed the behavior. And then the M period broke the L period. So you have a nice continuation here. And then of course they closed above the POC again, which is indicated right here. This would be called the settle price. You do not care about the end period. Like this period is your settle period and you don't really care for it, right? There's something also that we call spikes, right? And that's part of the TPOs, right? So I'm just teaching you the basics on the TPO, and I think there was some spikes. Okay, there's a spike here. So spikes are identified where you find the highest prior letter, period, or a candle. So if I was to hide this, right, for this day right here, my highest period was at this point right here. So I now know that this is my spike period, right? This is my spike area right here. So then what I do is I will go look here and I will just mark my levels, right? That this is my spike base. And I call that the spike base, and there's only like 2 rules you have to know about this. And this not nays, but bays. So now this would be the spike base, and this would be the spike candle or previous day high. The reason why it's called spike base is because every period validates the next period, right? In terms of price action and acceptance. Well, the M period is from 3:30 to 4 p.m. And what time does the market close? Eastern. Well, market closes at 4 p.m., right? So if the market closes 4 p.m., which period can validate it? It would be the next day. The next day, you're watching to see where do we open in relationship to market spike. Let me just think there's a way to, yeah, look at this. So then what I do is for this day right here, if you open above the spike base, that means that you are bullish, right? And the market opened right here, right? So what is market telling you about the spike? So as long as you open above the spike, you're remaining bullish, and the market opened above the spike and created a gap. So you really, you know, you want to be careful shorting too much, because most likely they're gonna look for higher prices. And kind of that's what they did, right? So then, you know, this is a bullish spike. The bear spike could also happen. So I think we had one before we, yeah, I think it was here. Yeah. So here's your bear spike, right? So the lowest period on this day was period K, and then the M period came and basically went below that, right? So let's take a look. So as long as you open below here, you're most likely going to continue. If you open above this level, like right here, or you auction above it here, and you stay above that level, that would be pretty bullish. So now when you look at this, right, here's your day, right? So you open, where did you open here? Above or below?
Above.
So you open above, that means that you're rejecting this spike And most of the time, this would be treated then afterwards as basically your single prints, right? Don't look at N. This would be your single prints basically at 5746. We went higher right here, right? That day we auctioned much higher. We went almost PDH. Then they came back. They came back into the spike here. They peaked below the 34, right? And this was, I don't know if you guys remember, this was a big zone here that we were watching. Then basically they set up another buying tail on the bottom, and then they went, of course, auctioned. And you see they created the POC at the level of spike. And then, I mean, this day here, what was this? November 5th, I guess the President's Day, they came close, and then, I mean, just rocket ever since. Okay, so that was the spike. On poor highs and poor lows, what you guys are looking for, let me see if you can find one quickly. Okay, here's one. So poor lows, poor highs mean, for instance, here, it just means that you have one TPO period by itself. You guys see how letter E is by itself here. If there was another letter here, you know, above, that would be a selling tail, right? That would mean that, you know, there's enough participation from other time frames and it created a selling tail. And that's kind of what I would look for, you know, to be like, okay, that's not incomplete auction. If there was a letter E right next to it, let's say like right here, we had another letter E, what would that tell you? Like if it was right here.
It's a failed auction.
That's a failed auction as well. And most likely what they do with failed auction is that they will auction away from it, right? Usually you get a little bit of a buyer's exhaustion. They will auction and you're looking for an opportunity to find that, and then they clean that up. So that becomes your first target if you're playing the failed auctions, right? You auction away, you're looking for buy entries, and then, you know, you're looking to drive it higher. And in this case, right, that level here where they went, I think it was way lower on this day. Yeah. So much lower, but then eventually they cleaned it up.
Hey, Shorty, one more time, can you explain the difference between poor high and a failed auction when there's like 1 versus 2?
It's the same. It would mean the same thing for you.
Okay, thank you.
If you get multiple, for instance, if you get like a crowded high or crowded low, I'm looking to find one. Typically when you see the price action, let's say we are here like on the bottom, and then they dip a little bit below and then they go much higher. That's typically crowded low. There's too many shorts loaded here. They trap them here. And then, you know, the smart money, or, you know, they close their shorts and then you explode much higher. Kind of what happened at that 34 level, I would say, like right here, right? If you look here, that's exactly what happened, right? So you came here, people shorted, they got really heavy shorting here, right? And look how they executed that same thing I just drew, right? Peaked above, people got excited, we're going lower, and then there we go, now you're at all-time highs. So this would be a crowded low short, and usually that can cause a short cover rally. And that's kind of what you got here. All right. My favorite setup that I like to use TPO for is the double distribution. So that's something like this right here. And if you guys look, so double distributions are imbalance days, right, in their own state. So if you look at this right here, that means the day was split into 2, right? It can be 3 or 4, but in this case, it's 2 splits. And you have a nice set of single prints, meaning you have single period in between separating them. So in this case, it's letter H is basically separating the 2 distributions, right? So you have one on the top and then you have one on the bottom, right? This one on the top would be pretty much within the value of that day, and majority of this would be outside of the value, right? So multiple ways you can play it, right? If you're, you know, looks like you're kind of trending here down, up, then you consolidate it, you had this day sell off on this day, and then you created basically a double distribution on a pivotal level, right? So I would say somewhere in here you created this. And if you go to the right, now you're like, okay, well, are you trying to find acceptance here, or where are you trying to find acceptance? Are you going to be trading within this distribution? Is the value accepted there, or with the bottom distribution, right? And you guys can see, then the next day they opened above it, but where did they close? They closed pretty much inside of it with a poor low. Then you had a poor high. The next day they opened below, then they pushed and they closed above it. Then they opened in the middle, then they closed below. So in terms of price action, this is just a fight, honestly, between the bulls and the bears in here. But typically what I like to do on double distributions, like let's say this one here. Yeah, let me just hide this. So let's say on this day here, they give us this retest right here. I'd look for potential longs here on the retest, 944 to 950. If they're to give us this here, this would be pretty good, right? Because they want to trade higher. If they lose this level, then you know you got to look where it's potentially going. It's probably going to that 27 level, which was our prior all-time high, somewhere right here. Right here. So most likely, you know, you lose this, you're looking at this level, and then you're going to have a fight. And ultimately, you would play this zone here. Because right now, we're in the sky, right? No levels above. So I like to play footprints on the first tap, meaning if this is my distribution here, the top one, and then you have the skinny belly here. I like to play these basically this way. So as long as you're trading above this level here, right? You're trading here, I'm looking for longs. Once you lose this level here, I'm looking for shorts. Typically on the first tap is what I've been looking for on our trending days. So meaning if you come in, you have this, and price goes up, and it comes back, I'm looking for a long on a tap, and then I also combine that with footprints to make sure that I have some people bidding here on the left side to make sure I can get in. Once I see that bid coming in, I'm looking for aggressive buyer on the ask, and I confirm that entry, and I look for opportunities to go long. Okay. In terms of footprints and why we use them is to help you basically identify value, right? To know, are you trading with balance? Are you trading without the balance? And is that area shifting at all? So if you guys look at, for instance, you know, this day here, you had 2 days basically of consolidation, right, within the value. And then you see that, you know, the volume and time being spent is probably shifting down. So if I look at this 2 days right here, you see how it's nice inside, and then we dipped below, and then you can draw the same here 2 days, and you see the POC shifted, the value low shifted also on volume profile. So a lot more volume is being shared on lower prices here. So until they clean this up right here to the top, there's probably a chance that we're gonna stay below this, and that's where the gap came in. They gapped over it, and now we're here. Does that make sense? You want to look for values. You want to go from balance to imbalance when you're trading market profile. It's a graphical representation of what's happening in the market. What questions you guys have on market profile? Maybe it was I said intro on market profile, so hopefully it wasn't too intro, but does that make sense to most?
Yep.
Yes.
Okay. A lot of you guys, might be confused what the difference between volume profile and market profile. Well, they tell you two different things, right? Volume profile tells you how much volume was shared at a price level, while, TPO or market profile tells you how much time did we spend at a particular level.
Shorty, can we get clarification on the poor high and poor low and excess a little bit, please?
Yeah. So I just covered it. Where are you confused?
Well, like if it's a poor high, I think it'd be going higher, but then it's like contrary. It's supposed to go lower. So I'm not grasping that.
Okay, so when you have a poor high like this one right here, this is a really good example of a poor high. You have the A and C period right here that are basically telling you that market auction is not done. It just means that, you know, the buyers got a little tired, nobody won here, so they're gonna most likely auction away from it. And then the next day they auctioned away from it, right? They came back close to the value area low, and then you see what they did, right? The day after they had a pretty, you know, trending. They went up, they cleaned up that poor high, meaning somebody won in that auction and it's no longer unfinished. So whenever you see a poor high, you're looking for the retests to clean them up, because most likely you're going to come back to visit. When you see access low, right? Let's say this one that we've had before, a 913 level, you see here, that's a pretty access. I mean, other time frame participants were entering here for selling. And then the price went and closed at the lows. You know, this one consolidating, but ultimately, I mean, we drove from 913 much lower. So this is access high. That means other participation entered. And you're looking for access high, not necessarily in balance, but you're looking at critical levels, like major levels of support and resistance. So for instance, you know, if you look at this level here, this was our prior all-time high. We tried to basically go here. We went to 919, but you see, as soon as we came here, you had this tail that's basically selling from there. That's other time frame participants coming in to sell. And on the same day, you had a poor low. So this is another good example where, you know, you have two things playing out for you. You have access high here. They came back again the next day. They opened kind of in the middle, they auctioned higher, and then they went all the way to the bottom, but they didn't clean up that access, right? They didn't clean up the access low here. They did it a few days after, right? They did it on October 21st. So access means other time frame participants coming in. A poor high usually or poor low, they have to be resolved. They become magnets to resolve the auction.
I see. Okay. Thank you.
So access is pretty much where they're going to defend price from going beyond that.
That's correct. Usually you have somebody else that stepped in, maybe, you know, other time frames can be weekly, monthlies that believe the value should be lower. And when something goes, it's called unfair high, right? When something goes up here, other time frame sellers are like, oh man, thanks. It's almost like, you know, let's say you have a pencil at your desk and somebody messages like, hey, LeBron, do you have that pencil? And you're like, yeah. And he's like, man, I'm willing to offer you $10 million. You'd be like, okay, you can have the pencil, right? Because the value that you had is less and you're willing to sell it above that value. Even if you bought it for $1 and somebody's like, hey man, then here's $200 for your pencil. You'd be like, okay, great, here's $200. Give me $200, I'll go buy for $1. So you're selling above the value. It's an unfair high, and unfair highs usually sell. So that's unfair high or access high.
Got it. Thank you.
Okay. In terms of, you know, I look at stuff on a daily, but I also shift to like monthly profiles. So you can do that here, where you change one period, change the drop down to monthlies. And this would be your RTH monthly profiles. I'm sorry, TPO monthly profiles. And obviously you see here, we auctioned back to that level that we talked about, right? This was the value area high that we had along with this right here. And that's kind of where you bounce, right? That was the level that they had to defend. They came back, they defended, and then you see, you know, this monthly profile here doesn't look so good, right? There's a lot of gaps. You basically gapped October's value area with election. So eventually, let's say they come to this area right here and they lose, what is this, 5913? It's a quick drop, right? Most likely quick drop to about 5784, and then you'd be dancing somewhere around here sooner or later, right? So same analysis on the monthlies. I would look at this and see, you know, how's the value? Like, are we overlapping? And this is a overlapping on the outside value. So as long as they're holding, you know, 5934, that's pretty good because the all-time high is right there somewhere at 2575. I believe it's 27 and a quarter. So as long as they're holding this area, right, they will test it sooner or later. they're gonna come here and test that, right? Because there's not much really stopping them. You see them building a distribution here right now. So as long as they hold, let's say 83, that's good. They can go higher, lose that, most likely drop all the way to 5935. So what is that? A few points, 50 points or so. Yeah, so 50-point drop between here and here. This would be a good opportunity to look for longs in this area. Most likely they're gonna defend that. The same analysis. I mean, I'm doing that on monthlies. I'm looking on weeklies. I will turn on to the weeklies and I will look at, 65 minutes. And I'm looking to see how is the weekly doing, right? So let's see, here's our last week's profile, and this is what it looks like. Let me just make it a little bit bigger. Put 7 in this. I can't even do it on 7. Okay. So you see here, I mean, you're in balance. You went lower with this profile, double distribution, and then came the gap. And you see the prior week value area high is 58-ish. So it's important that we hold this week that's coming up, right? Maybe a homework would be that you guys, based on what you learned today, do you figure out how is this going to work out? So if they hold that level, that's basically up to here. That's, they're remaining bullish. They're not rejecting the value. But as of right now, right, they open low and they close pretty much at the high of the week. So let's say the rest of the week they come here. I would expect buyers to come in here. If they can defend that, then we get a new all-time high. If they lose this level, however, what would you guys expect?
The 2-day prior POC, at least.
Yeah, I would say most likely, you can come back all the way down to 799. That'd be good. You also have the big level at the prior all-time high. I mean, you should not ignore this. They wanna spend the time, price and time above here. If they fail to hold here, that's a big warning sign for the bulls. That means they were not accepted at all above here. Then you're looking for, I would say, you lose this. Probability of us catching this, virgin POC would be pretty high here at 800, and then ultimately fixing this weekly poor low would be here as well. That would be right here. That would be a weekly poor low. Maybe it's not poor low, it's probably a tail, small tail. But that would be the area that I'm kind of interested in. And if you look here, I mean, we've spent a lot of time, 1, 2, 3, 4, 5 weeks, basically in a bracket, right? Here to here, you spend 5 times, and you see here now, there's not a lot of volume here that's above. Right here. You guys see how volume's thinning out right here. So they need to build value and volume here. They need to spend time and volume here above. So they can't lose this level. It's in their best interest to stay above it. Okay. Does that help with intro to market profile?
Yep.
Okay. All right, so we covered footprints. I'll share them tomorrow on probably the rest of the trading because I know you guys are interested in them more on the footprints. I do explain every night, right? Watch lists when we have them, when we need them. Explain market profile over and over. If you're new, I would say 3 to 5 months, you're most likely gonna pick up volume profile, market profile. And then the last piece would be, adding the footprints to your arsenal to make sure that you're seeing the orders and how they're coming in and how they're being executed. Okay. In terms of volume profiles, so same things like I do on, I would say on TPO, right? I look at the daily profiles on the stock market using volume profile, which is basically this. Let me just change them a little bit, and this would be my daily profiles here. And if you guys look, I usually look at them on ETH, but I don't care what level you guys use personally. So here you see on volume profile, let me make sure. Yep. You're looking to see how are the value areas, how are they placing, right? So this was definitely a short cover rally followed by November 5th. And you see a bunch of what profile shapes do you see here ever since basically here? What is this?
Press P's at
An
the top.
uptrend.
I would say you're seeing a lot of P's, right? This was a nice P here. But here, there's a little bit of concerns for the bulls when you see a bunch of compressed P's. When you see a P shape, that means you're not agreeing on particular price lower and you want to go higher. But when you don't agree lower, right? Let's say this area right here, and your profile looks like this instead of looking like this, what does that tell you about this agreement here? It's not that bad. So you're not disagreeing, a major difference between. And then when you look at the regular time, where a majority of the volume comes in, right? This does not look like a P shape to me, right? This looks like a nice distribution, right? Profile, D shape, and then you can add some candles in here and see how they traded around it. So market's telling you something. Does everybody see it? It's identical setup. So pay attention to what happened. This is your value area, right? So value area is where 68% of the volume occurred on this day here. Then you have this day here, the value shifted nicely, right? So market's still pretty good. RTH, market's still doing great. They're shifting the value area higher. They had some risk here, they gapped over it. Then you have this value area here, they ripped higher. Notice on this day here, we peaked above the value, right? And they closed pretty much, I would say, above it, right? Here we peaked above it, and where did we close? Here we closed above, here we close.
Inside of it.
Close inside of it, right? We came right to the POC of that day and we held it, which is neutral bullish, right? We're leaning more bullish. But the difference is that, when you look at the volume, I think I actually deleted volume just moments ago. So if you look at these candles, right, and you see here, they're selling coming up on this candle here on 30 minutes. There's a nice hammer candle that's coming in here. And it's, when you look at the volume, it's picking up, but nothing crazy, right? It's not a pickup that as much as this volume here, they're bouncing off of the POC, which is expected, right? And that's also your 530 to 4. So tomorrow, if we open, let's say, below this value area high of 60.31 and we stay below it, what is market telling you?
It's rejecting.
Most likely rejecting, we're going to go into the balance, right? The markets don't go from bullish to bearish, right? They go from bullish, consolidate, bearish, right? And same is true for the opposite. So we can expect to see a consolidation, right? Is there anything telling us that they can't look at this 2 days or the run up, right? I mean, all the way from here. You can draw this POC and what is actually happening, right? You're looking at this, the value shifted nicely from this day here. So they could auction all the way to 59, 54, and they would still be in control in terms of, a couple of days here. Would that cause framing down start on a daily? Certainly, right? So framing down would be right here below 6,004. If they want to continue, they're looking somewhere at 60.40 to continue the framing up. As of right now, the bulls are in control pretty much on every period. You have the weeklies, right? They're making higher highs, higher lows. The dailies are making higher highs, higher lows. So, I mean, they're looking to be in total control here. And we saw the monthly here, nothing would change here 10 days in, but they're in control. The first step for the bears is to end the framing up on a daily time frame, and that would be losing the low of this day here, which is somewhere, I believe, 04 and some change, 0475. So they can go below this, and then, you know, that would be a PDL plus this little value area high. It would be, you know, quite a bit of buyers showing up here to defend that. If they crack below that, then you're most likely opening that 55 retest somewhere around here, 51 to 55 to be tested. Okay, as of right now, bulls are total control. Okay. Value placement wise, I mean, we had a nice gap, value shifted, value again shifted here higher. There's no overlap in value. Auction in terms of RTH not slowing down. When you look at the total picture, you know, is there congestion now coming in? Yeah, there's definitely congestion coming in. You know, you see the massive value shift here, then you have a smaller shift in value here. So tomorrow, you know, let's say you're looking at this zone right here. You know, you would want them to defend this tomorrow if you're a bull, right? This little zone right here, the value area low and this value area high. This would be a, you know, a good one to defend. Because if you lose this, there's a high chance you drop 585 and then ultimately all the way to 957. That makes sense why I think like that. Okay, I'll take your silence as a yes.
Sir, yes, sir.
On VRVP, so that's just part of volume. I usually keep this on when I'm trading, and it tells me basically cumulative volume for whatever I'm looking at. And in this case, you guys see that there's like a nice distribution all the way here with the POC, where the weekly POC is. And that would be here, right, at 23. So losing this level, I would say, you know, adds a little bit of pressure, but then losing this zone here, the green zone, that can really, really trigger all the way down. And that would be like there's a bunch of epochs here. So you have a epoch here, which is a virgin point of control. Then you have a nice one here with the weekly value area low at 5,800. I know it's far, but you know, One News sends us here, guys, because there's no market structure here at all. Like all of this would be basically sold off quickly if there's something negative to come out here. I would personally look to see, can we lose this level of 59.85-ish? You lose this level, I would think there's a high chance of a sell-off, and they're spending a lot of time, you know, in a top distribution now. So if they're able to lose this, that would become a pretty good warning sign that we're most likely gonna lose this and go here. Okay. All right, guys. I think I will stop here just for the purpose of time because I have to help my kids and wife. I will do the stock scan tonight, 9, along with the market update and the write-up. How's that?
Sounds great. Thanks.
Sounds great.
All right, guys.
Thank you, Shorty. Appreciate it.
Shorty.
Have a good day.
The GOAT. That's why he's the GOAT.